Let's switch gears and talk about electrical equipment then, and focus in on Bajaj Electricals, which is having quite a day on the in the markets today. It's gaining about 3% or so. But let's talk about the demand trends post the festive season, how the B2B demand trend pans out. We're joined, in fact, by Anuj Poddar, who's ED at Bajaj Electrical. Thank you so much, Mr. Poddar, for taking the time. Let's start with the demand scenario. How does it look post the festive season? Has it weakened, or is there still some excitement to talk about?
So, a few points there. I do think the demand trend this quarter has been fairly mixed. When I say mixed, it's not presented as a very clear trend, and that's number one. Number two, if I slice that, I think rural has been weak. Urban has kind of been okay there. The seasons have not, the winter has not really kicked in. I think last 2 days, suddenly from the news that I have from across northern India, the winter seems to be finally kicking in. So it's a slightly delayed kick in of winter, which affects some of our product categories. So it's been a mixed trend versus what we estimated at the start of this quarter. Even to your question on festive, there was a week in there where we saw strong uptick, then it fell, then it came back. So it's been a little bit of a yo-yo on that. The last point I would make on the demand trend, because most people trying to compare this year on year, we must remember that last year was a bumper quarter, that is Q3, because everybody was coming out from pandemic. It was a pent-up demand quarter. So to that extent, a Y-on-Y quarter, Y-on-Y demand comparison or sales comparison this year would be slightly off the rails here. But other than that, it's been a mixed bag right now.
All right, the high base is certainly something to bear in mind. But let's talk about inflation, and we've spoken about this in the past, cost pressures, and they've been across the industry for you as well. Do you see the requirement to take additional price increases, and how much can you pass on before it starts to hurt demand?
So that's always the tricky question. I know, like you said, we've taken about 12 to 15% price hikes since January this year. But as we all know, the cost side pressures have been much higher. This has been impacted margins that most companies or brands have been trying to offset through other means. There's only a little time play that one can do, but ultimately one has to pass on the cost side impact into the marketplace while just playing with timing to kind of allow the demand to settle and stabilize. I think from January to August, most companies took price hike in a secular manner and did not see impact of demand. But this quarter, like I said, has been a mixed bag. And most companies have tried to minimize or stay away from price hikes. But there's only so much time one can avoid that. And from what I see around us, including for us, I think from January, we'll again be forced to take another price hike. In terms of the cost side pressures, commodities, I want to keep my fingers crossed on this, but hopefully we have seen the peak. They seem to be flattening out. There is some early noise of, what should I say, reduction in costs of commodities, but it's too early to say that that's here to stay. Yeah.
And with those already having been registered, are you seeing any trends where there is down trading, where people are preferring cheaper alternatives?
So that's an interesting question, and not really. And I think that's for two reasons. One is we've just seen a little pressure on demand overall because of the inflation around, not necessarily in our categories, but across in the economy. So that seems to have muted demand a little bit on an overall basis. Second, specifically on down trading, I think, like, various economists have spoken about, we seem to be in a K economy, which is there's a certain segment at the top level that has not been affected by the economic challenges, etc. And therefore, that segment does not feel the need to down trade, and the premium end, etc., continues to sell well. So that demand continues. But there's a vast majority of middle class or lower middle class or lower class that has actually borne the brunt of the economic challenges, and therefore that's the one that is hurting. If this distinction had not been there, you might have seen a demand down trading. But because of this, actually, it's an oxymoron. You don't have a down trading. You have a certain upper class where the upper segment or premium segments of products continue to do well without down trading. But it's actually the middle and lower segments of product that seem to be facing the demand shortfall a little more.
Now, Anuj, one segment or area that seems to have been resilient is the B2B space, where seemingly channel checks are suggesting that you are seeing higher demand. Is that the case for across the board for you? And what is the order book in the segment looking like?
So, B2B, I think moves in a more lumpy fashion. So yes, we do have institutional sales model, etc., and we also sell B2G, the canteen store departments, government, etc. That has, like you said, been slightly more stable in the consumer side of the demand, but that tends to be more lumpy. So it's very hard to draw linear assumptions of that. But on the large part, I would say yes, that's been a little more stable than the volatility that we've seen in the pure B2C side.
Anuj, will EPC see a pickup going ahead? What are the trends? What is the growth that you anticipate here?
So for us, EPC has been in a particular, evolution. We've been dealing with certain legacy projects, which were sticky projects, and focusing less on the order book, but focusing on execution and completion of these legacy projects. I think we'll be pretty much done with that in the next 6 to 12 months. We're at the fag end of that piece. And as we, have that visibility, it's now that we're starting to bid more than we were bidding in the past. So I do think our order book will grow in the next year. I think the timing is good because from the government's announcements and intent, I think the capex cycle is something that will pick up in the next couple of years, and we should be well positioned to ride that upswing on the capex cycle. Hard to quantify a number because we are at a low base, but I think we should see healthy pickup on our order book and therefore our overall EPC business in the next 3 to 4 years.
Let's talk about inventory. How is stocking being, particularly because we're speaking at a time when there could be a third wave because of the way Omicron is moving? How does that look right now?
So I think that's one lesson everybody has learned very strongly from the first wave of COVID, where stocking up or supplies were a problem. If anything, at least us as a company, we are sitting on the higher side of inventory now, much higher than historical levels of inventory, and so true for a large part of the chain ahead of us. I think stocking is not so much of a concern in terms of people are sitting at good levels of inventory, and when the demand is there, let's say winter also now it's been a delayed onset or pickup of winter, but I also believe there's going to be a longer winter this year. So I think in terms of irrespective of further disruptions on the supply side, I think we should all have enough stock to cater to the demand.
In terms of supply side challenges, we've already spoken about the cost pressures, but is there anything else in terms of supply side problems that you're facing right now?
So availability of supplies is not so much of an issue, except for chips. In our business, particularly chips constitutes a very small segment of products. It's just the LED products. Most products of ours are non-electronic. So other than chips, we don't have a supply side issue in terms of availability. The core issue we've been dealing with is the cost pressures in terms of just the commodity cost. And like I said, I would yet hope that we are at the peak or past the peak, but I would keep my fingers crossed on that.
All right, Anuj, thank you so much for taking the time. Wish you all the best and a very happy new year from all of us here at ET Now. On that note, we're slipping into a short break, but there's more on the other side, so do stay tuned.